Welcome to the Best of Investing. You're listening to the Best of Investing on Talk 910. This is the show where we present valuable information about real estate, the financial markets, and other economic business of the day. And for those of you listening for the first time, here's our format. A few guys sitting around a bar, having drinks, without the drinks, talking business with you, the audience listening in. I'm your host, Edward Brown, and I'm pleased to introduce my co-host, Julie Kennedy of Marin Modern Real Estate. Mark Humph is off today, and Robert Schiff of RPM Mortgage. Our phone number is 888-912-1190. Write that number down, 888-912-1190, because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. Now, the vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, located 1 hour northeast of San Francisco. And the vacations are free. Their only request, a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouse4fun.com. You can reach them at 916-777-5511. Now, today's trivia theme is in honor of Professor Russell Johnson, who just recently died at the age of 89. The trivia theme is Gilligan's Island. You think you know Gilligan's Island? Just wait until you get a hold of these questions. In fact, I was telling Don here in the office earlier, one time my brother and I were bored, and we literally came up with 108 episodes from memory. Hey, you remember the time when Phil Silvers, Harold Hecuba, and just boom, 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 boom.
So that was your social.
That was my childhood. Gilligan's Island. Okay, our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show. And we're also on television, Comcast Channel 26 and AT&T Channel 99 on Saturdays at noon and Sundays at 6 p.m. And Julie, I'm going to turn it right over to you because you have some interesting information and articles and stuff that you want to show us or tell us on the air about, like Zillow, etc.
Well, yeah, so I wanted to share, it's an article that I read recently, but it also backs up my sense of annoyance, I suppose, when I'm working with a client who wants to quote either Zillow or Trulia, one of the online websites that gives property values. And what often happens is that with these sites, they use an algorithm for coming up with value. And in fact, I have yet to see, Mr. Zillow driving up in his truck, pulling into somebody's house and looking at the interior and saying, oh yes, well you have the upgraded kitchen, or no, you didn't remodel your bathroom like the one down the street that just sold for $1 million. So I'm always
what they do is they look at square footage and the zip code, and that's about it.
That's right, exactly.
And the square footage may or may not be accurate.
Exactly.
Other than that, they're perfect.
Well, I think what they're good at is spotting trends. Or charting trends. So they can say in a given neighborhood, in a given zip code, within a certain number of quarter mile from, you can pretty much say, particularly like maybe a subdivision here, like Hamilton, or a particular neighborhood in Palo Alto where you've got pretty consistent values, they can come up with a pretty close proximity. But when
yes, those algorithms are better than nothing.
Right.
But when you have a client that's coming to you and saying, well, I know the value because I saw it on Zillow on this algorithm, they're talking to you because you're a professional, more knowledgeable than them, and probably more knowledgeable than a lot of other realtors about the value of the houses in their neighborhood.
Well, it
because that's your livelihood, that's your business,
you.
and you know it every day, and that must be frustrating when.
Well,
one of the guys in my office was doing a loan for a surgeon, and the surgeon says, well, no, we got to do this and this and this, and he said, I'll tell you what, in your next operation, I'll come in and tell you where to cut. That's your business. You know it better than I.
Go ahead, Joey.
Well, one of the things we as realtors do is we need to manage our clients' expectations. And when they come with an expectation of a value, it takes a lot of kind of hand-holding and comp giving. And I often like to take my clients out to the open house that might be the competition for their house.
I think that's really smart.
So that they can actually say, well, gee, this house has fresh paint, or this house has a newly remodeled, or an addition, or it's been staged, and it helps them get a sense of what they really need to do to be competitive. So again, I mean, I think that those sites can be helpful, but they can also, again, set up some false expectations.
Are you finding that the values coming up on Zillow or these sites are tend to be higher than the value you see in the real estate market right now?
Absolutely.
Really?
Absolutely. I mean, yes. And then particularly if people have been following for any length of time, for example, Zillow, they might feel that like maybe in the peak of the market, their property was showing up at, say, $1 million. Then there was a decline. Well, maybe it wasn't worth $1 million at the time, like in 2007, but they hung on to that number. And now you're telling them, well, gee, maybe it's only worth $750,000, and the $1 million was never accurate. So just a lot of educating of clients takes place when they have been using these websites.
Well, yeah, especially when Zillow can't actually go into the house.
Right.
And,
Right.
Mr. Zillow doesn't come knocking on your door.
Yeah, and so you suddenly added a second story or
Right.
some other addition.
But I would imagine
Or a poorly house-trained dog.
I would imagine that most clients, when you're dealing with them and you show them comparables and say, here's the square footage, here's where it is, drive by, that they would be willing, that they would understand and start seeing the reality.
Yes, hopefully, usually they do. But it just adds that extra layer, and also gaining the trust of your client. You want them to believe, they want to believe the best, and you're not giving them the best news. It takes a little bit more work.
So when you interview a new client, you tell them that right away? Say, okay, now there are websites out there, not picking on Zillow specifically, but say, are there websites out there that may give you certain information? Just know that I'm the professional. Trust me, I've got everything at my fingertips.
Well, I don't say exactly that. I mean, some clients just don't even pay any attention to that. They do trust you as the professional. But I'm going to have to remember that line.
Okay.
I like that.
I tell you what, we're gonna cut to a first commercial break here, and again, the theme is Gilligan's Island. You think you know Gilligan's Island? Now, these questions are going to start off relatively easy, I say, and they're going to get harder. Were you guys Gilligan's Island fans?
No, I was sort of at the opposite end of the scale from you.
Oh, you're more the intelligent person.
No, I didn't watch it.
You didn't watch it? Oh, okay. Oh, then
So this will be hard.
This will be hard. Okay. Where did Mary Ann call home? So on the show, she said where she came from. The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. On the show Gilligan's Island, where did Mary Ann call home? 888-912-1190. Make sure to include your name and your email address. Speak slowly. Spell out your email one letter at a time. Don't touch that dial. The Best of Investing will be right back. Okay, I don't know. Hold on. No, I'm going to have to, before we get started again.
Was it staticky?
A little bit, yeah.
It kept kind of popping in and out.
Yeah. So it's sometimes what happens. Okay, so you're okay. You're not touching anything.
No.
Are you? Let me just get by here. If we can make sure that all of this is up here, so that we. And again, I'm sorry it's like this, but and all that is touched here. And all of this is in.
Someday we're going to have a totally wireless world.
Yes. Okay, all of this is in here.
Is it Calabasas?
Calabasas.
It's some little Midwestern place, I think. But I'm
I
not
should have
sure.
said like a state.
Don't ask us.
Did you
You
watch
say
it?
they get easier.
They get harder.
They start
Okay.
easier.
Yeah.
All right.
I mean, if you never see the show, then they're all hard. You're right.
This sounds better to me.
Okay. Yeah, because again, it's as long as we don't like touch the things that make this go, we should be okay.
Stop
I'm gonna get you a
playing with
little,
your
Stop
I'm
tools.
gonna
playing
get you a
with
little
it.
plexi shield here to go.
See, it's a good thing that we're on Saturday, not Sunday, because
Yes.
of the Super Bowl.
Yes.
Ooh, there's a big uptick in real estate market after Super Bowl. That's one of those dates where then you start
Always.
to see more.
Always.
Yeah, you can't get the guys to look at open houses then.
No, they said that the reality sets in, oh my God, it's next year.
What's that with that?
Yeah. Yeah, oh my God, it's no longer
The
Christmas,
end of the
Thanksgiving,
holidays
the
are
holidays are
over.
over. I gotta do my taxes, I gotta do this, I gotta do that, I better start paying attention.
That's a good point. Okay, we'll get right into email time. Shall I work for you? Okay. Let's do this here. And away. Welcome back to The Best of Investing. I'm Edward Brown, your host. Mark Humph is off today. We have Julie Kennedy of Marin Modern Real Estate and Robert Schiff of RPM Mortgage in the studio. And when we get to the first commercial break, we asked this trivia question. Again, the theme is Gilligan's Island. Where did Mary Ann call home?
Red Hook.
Red Hook. Was that New Jersey?
Yeah.
No. And the answer is Kansas. You said it was a Midwestern town. You
I was
did?
gonna say Indiana.
Okay, well, that's close. That's kind of close.
Kind of
You know,
close.
H-I-J-K.
Yeah.
Close enough.
Yeah.
Okay.
I like
You know
that
what?
HIJ.
Let's shoot right into email time. I've got a couple of interesting emails here. Robert, here's a question for you. With the new Dodd Frank rules, how long can I now reasonably expect to get a loan for a house purchase?
Well, that's a good question. The Dodd Frank is legislation that was passed about 2.5, 3 years ago, and it's basically just starting this year, really coming into effect. And they're going to roll it out over the next year or so. There's more to the legislation that they haven't even gotten to yet, but the part they've gotten to is supposed to be so that we won't have the problem that we had before with all the liar loans and all the people borrowing more money than they were able to pay back. Now, with the legislation, that it's very strict underwriting, that the banks have to be able to prove that each borrower is capable of paying back the loan that they have, so that the ratios, which were very flexible, will now be very stringent, that you have to be able to prove to the bank that all your payments are no more than 43% of your income.
Well, it's kind of a weird number, 43%.
Well, it used to be sort of 43%, one of the ratios, but the concern is that the government programs now are going to look at all the loans that Fannie and Freddie are buying. They don't want to be stuck with bad loans. They don't want to be stuck with loans that default. So they're saying that the mortgage banks and the mortgage brokers that do the loan, if the government finds out that it didn't meet all the qualifications for a qualified mortgage.
That's the magic thing, qualified mortgage.
Yes,
Okay.
that the banks will have to buy it back, and they'll have severe penalties. So,
And what is it? What's the benefit of to the borrower? Do they get any benefit themselves? Like they don't have to pay interest for?
well, oddly enough, the legislation is supposed to be proactively beneficial to the borrower, but
you know, that
being
goes.
in the business, I don't see it that way. The benefit to society is that you can't say you're making $800,000 a year when you're doing flapjacks.
Who cares about society? Everybody's
Yes.
out for themselves.
Well, I mean, everybody did suffer by the fact that people were getting loans that they really shouldn't have been able to get.
I like that term, liar loans.
Yeah, yeah.
In fact, there was this it said here, there was a real estate story, and it says borrowers may find mortgage harder to secure.
Yes.
Yeah, hello,
yes.
that's kind of obvious.
Now, at the same time that all the regulations are set in and there's qualified mortgages, there are avenues that are now set up. The people that are lending money aren't dummies, and they know that there may be a lot of people who have excellent credit, who are credit worthy and really able to pay on the loan and probably are very unlikely to default, but they don't meet the qualifications for a qualified mortgage. And some of the larger banks and larger institutions are setting up programs that for a slightly higher interest rate or slightly higher fee, you'll be able to have another avenue. But that's not really solidified right now.
What
What they're avoiding is that the loans that you used to get where you would actually pay less than you owed, or loans that were amortized over a longer period than 30 years, or loans that were interest only. Most of all those loans are no longer available.
Neg-am loans?
Neg-am loans are no
Of course.
longer available.
Well, it says here, lenders must document at least 8 specific criteria, including income, assets, credit history, and other debts to make sure the borrower has a reasonable chance of repaying the loan.
Yes, absolutely. And so the time frame, the email was, how long will it take to go through a loan? It won't take any longer than it's been, but
Okay.
There'll be some people that won't be able to qualify that might have been able to qualify on certain loan programs. Some of the banks have cut out some of the loan programs that had a longer amortization schedule, so they're easier to qualify. But as anything, this is not a simple process, it's a complicated process, and if you're contemplating getting a loan to buy a place or to refinance, you should make sure that the person you deal with is a professional and really knows what they're doing.
It says here that also they can't charge fees and points that add up to more than 3% of the loan.
That's correct. And so in the process of creating that legislation, the government was notified that some of the fees for FHA loans, which have now increased to the point that some of the FHA loans were over 3%, so they wouldn't qualify for the government rules that were set up. So oddly enough, the government found a way to say that some of the fees on FHA loans don't add up to the 3%.
Yeah, there you go. What it says here, the new rules only ban one thing outright: no doc or low doc loans.
Well, yeah. So,
okay, so how do people get a hold of you when they have more questions about these new rules?
I'm Robert Schiff at RPM Mortgage. RPM Mortgage is a mortgage bank, one of the biggest in the state, actually one of the 10 biggest in the country, just about, and one of the top lenders in the Bay Area. And the best way is to get a hold of me. You can always check on RPM's website, which has a lot of interesting information. You can go to RPM Mortgage and /Robert Schiff, or you can always call me on my cell at 415-515-1941.
That's an easy number to remember.
Yes.
How long have you been in the business?
I've been in the mortgage business for about 20 years. Before then, I was a realtor and a real estate investor.
Oh, okay. So
It's going on, I won't say how long. It's been a while.
75 years. No, I'm just kidding.
And if I can just add, as an
Sure.
agent, I often give my clients RPM as one of the mortgages that we use.
Very, very
Yeah.
good. Very good. Yeah, and if people can't get a loan with you, then they could go to our other co-host, Mark Hahn.
Mhm.
We refer business to him.
Absolutely.
You know, at Pacific Private Money, Mark can be reached, let's see, at 415-883-2150.
Very good.
So, yeah, if I remember that phone number, you said it a couple of times here. So,
Yes.
if you can't get a regular conventional lender,
And that's where I'll take clients if I find it's just, we were talking before the show started, I have a client now who has to get a hard money loan to clear up their credit and be able to eventually meet the criteria for a qualified mortgage. So we're going to have him go hopefully to Mark and get a loan, and in a year or two they'll be able to benefit from having Mark help them clear up all their problems.
Yeah, so Mark basically just acts as kind of a bridge lender
Yes.
to get someone over the hump, and then they could qualify for a regular mortgage.
Yes.
Yeah.
We are just a regular appreciation society.
Yeah, well, listen, you try to help your friends.
Well,
here.
that's right.
Okay. Tell you what, Julie, before we get into your email, because there's a very interesting one about how question about real estate slowing down and about waiting to buy a house or purchase one now. Now, the Super Bowl's tomorrow, so I'm guessing there aren't going to be too many open houses unless the wives are leaving the husbands at home. Does that happen a lot, by the way?
It does, although you would be surprised. There are some people that actually don't watch football.
Yeah. Well, and also, and especially
especially
Niners.
this year in the
This
Bay
year,
Area.
yeah, exactly.
Yeah. All
Unless
the
they want to,
anti-Seahawks people.
they want to root against Sherman.
Yeah.
Of course, Pete Carroll's a local guy, so
Yes.
kind of root for him. Okay, second trivia question, commercial break. Gilligan's Island is the theme. What was the professor's first and last name on the show? The first 3 callers with the correct answer win a free 3-day 2-night stay at the Lighthouse Resort. I told you this question is getting a little harder. The last one's really hard. Even I didn't know this.
Oh, really?
Yeah.
Okay.
Let's see. The first 3 callers with the correct answer win a free 3-day 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Check them out. Call 888-912-1190. That's 888-912-1190 to answer this question. What was the professor on Gilligan's Island? What was his first and last name on the show? So not Russell Johnson, that's his real name. What was his name on the show? Call 888-912-1190. Make sure to include your name and your email address. Again, speak slowly. Spell out your email 1 letter at a time. And don't touch that dial. When we come back, Julie is going to answer a very interesting email question. You're listening to The Best of Investing. Julie, when you talk, because I can only put this up so much, so even though you're talking to him,
I shouldn't look at
just or remember, you can pivot. Just remember to keep your mouth
on it.
very close.
Yeah, your neck's stuck to the microphone.
Yeah. It just kind of because I want to hear you, you know.
Okay.
How is your business?
Busy. Really busy.
That's good. That'll good be.
Who do the clients tend to use at RPM?
Well, now Fred Morfitt, because he's over there with the, and also Robert Spinoza. Those are my 2 RPM go-to guys.
That's how we got Julie was because of Robert Spinoza.
Rob's the dynamite.
Yeah, he is a hard man.
Oh, this is silly.
He really impressed us. Come to open houses, brokers opens, and introduced himself, and brought materials, and then used the social media really well to promote his real estate colleagues. So we like that. I can cough now.
Yeah.
I guess we've got some snow in the mountains.
That's what I heard.
Yeah.
Really? And that little rain we had?
They got a couple inches now.
Weighty. Welcome back to The Best of Investing. I'm Edward Brown, your host. Mark Hoff is off today, but we have Julie Kennedy and Robert Schiff of RPM Mortgage and Julie Kennedy of Marin Modern Real Estate. Okay, can't tell the players without a scorecard. Okay, we cut to the second commercial break. We asked this trivia question. Again, the theme is Gilligan's Island. What was the professor's first and last name on the show? Again, if you didn't watch the show, you wouldn't know. Roy Hinckley.
It wasn't Irving Corey.
No, it was not. Okay, Julie, we got an interesting email for you that says, there's been some talk in the news recently about real estate slowing down. Should I wait a bit to buy a house? And in fact, during the break, Robert asked you how your business was going. That kind of feeds right into this.
Well, it does, but interestingly, I didn't know that was going to be a listener question. And I have a nice quote from Jed Kolko, who is one of the vice presidents at Trulio, who I just learned actually is related to me by marriage.
Yeah.
So, this
But you're not married to him.
Wait.
No, but
Okay.
my cousin Mona married his father.
Okay.
So I'm not sure what that makes him to me. But anyway.
Total stranger. Go
Yeah,
ahead.
total stranger, exactly. But Jed's in the news a lot and is quoted and is seen as quite a guru. So I want to address exactly that question with what he says, which I totally agree with. He says prices aren't expected to rise as much in 2014 as they did in 2013. But he said it's most important to watch where they slow most and why. And he says if prices are slowing for the right reasons, which means growing inventory, fading investor activity, and rising mortgage rates are all natural price slowing changes to expect at this stage of the recovery. But prices could slow for unhealthy reasons too, if we we have another government shutdown or more debt ceiling brinkmanship, a drop in consumer confidence, and he doesn't mention this, but also unemployment, which continues to
that to me is a major thing. The other things are a little kind of this external forces type of thing.
Right, but unemployment is huge.
Oh, of course.
And so many of the unemployed are actually not even counted anymore because they've given up looking for jobs.
See, I always wondered about that. If they gave up looking for jobs, how are they living? Assuming they're not all on the street.
In mom's basement.
Oh. It's a scary place.
I mean, that's the thing. That there's an awful lot of families that are now habitating generations under one roof because either mom and dad are out of a job and living with their adult children, or adult children are living with mom and dad.
They're collecting on their inheritance early.
Yes.
Or they're not collecting on unemployment anymore right now.
Well, exactly. Yeah.
The first of the year.
Maybe they saved it all and invested it.
Bought a place in Mexico.
Yeah, exactly.
So if I were a buyer in the market, particularly a first-time buyer, I'd scramble to get into something, because I think what we're going to see the most activity in this year, at least in the Bay Area, because prices are so high, we're going to see more, trade up, trade down, trade sideways.
Like the starter type homes?
But there'll be fewer. Someone like myself who may be trading down to something smaller, or someone who needs a larger home because they have a growing family. So these are people that are already invested and have equity in the market. People who are going to have a tough time are going to be the first-time home buyers. Because in reality, who in their mid-20s, except if your company was just bought by Google, who in their mid-20s has enough money to save up for that 20% down that you now need?
I was fortunate when I was 24, and this was when interest rates were a little higher, but I bought a condo where I actually did borrow 20% from my mom, and then I got 2 roommates, being single and all that.
So it helped offset your mortgage.
Yeah, and I was able to assume industrial bond financing 6% lower than what the mortgage rates were. Mortgage rates were 13 point something.
What was that in industrial bond?
Industrial bond financing for the development, and so instead of interest rates being 13 and 7/8, I was paying 7 and 7/8.
Wow.
Yeah, and it was like I was on top of the world.
Yeah.
But then, how much did the condo cost at that?
$178,000.
Right.
Yeah.
So I mean, if you think about someone who's a starter home in any of the hot Bay Area communities is anywhere from 700 to $1 million.
But apparently, look at what's happening in San Francisco. That they're worried that the lower middle class and middle class are being bought out and not able to. But there's still plenty of people who apparently have enough money or are making enough money to qualify for those kind of purchases. As long as there's more inventory, less inventory than there are buyers, it's going to be a competitive market as it is now.
Plus the rental market.
The rental market's crazy.
It's just crazy.
But if you can get into a condo, for example, we're talking about single family starter homes, so you can get into a condo for a lot less. And I would advise anybody who's a first-time buyer to beg, borrow, and steal, scrape together, and get into something.
When I was in college in 1979, our statistic professor had told us real estate. California specifically, we're in Marin. He says, beg, borrow, or steal, buy real estate.
Absolutely, and I agree with you. And there are some financial avenues that available through RPM where you can buy a house for as little as 10% down and not have any mortgage insurance.
Oh, really? That's amazing. And actually, I had to have mortgage insurance back then because it was industrial bond financing, but. I love condos. I know they don't go up as much in value, but you pay one HOA fee. As long as you can control that to make sure it doesn't get out of whack.
You want to make sure you're buying into a healthy homeowners association.
Yeah, exactly. Be the president.
That's the important part, because if there's a homeowners association that had a lot of foreclosures and they're behind on their dues, or
that's
there's
true.
a lot of vacancies or investors have bought a lot of them and then non-owner occupied, it may be difficult for the clients to get a decent loan.
Well, you guys wouldn't have liked last week's guest because he was the opposite. He said, the American dream is over and everyone should just rent. Look what's happened. And I know he's looking into a specific bubble of, the last 5 years. But
and what is his Does he own apartment buildings that he rents out?
You know, that's a good question. I don't remember what that part. I don't think I asked him specifically.
Because that's true. It's much harder to qualify and much harder to come up with money. But the rents in the Bay Area have gone up so much so that the way I see things, that
you know what? He was in Chicago.
Yes, in the Bay Area, I think I can do spreadsheets, and if you're have a decent job and a decent salary, you probably are better off owning than renting.
And you know,
you'll probably be paying less money monthly, especially if you take into account that you're going to be paying some of the principal and you have tax benefits.
Yes,
and the thing is, he was talking about, he's in Chicago, and he was saying that, and even Chicago's really not that bad an area where he was at, but he said, you know, vacant home after vacant home.
Well, if you go onto my website, I have a chart on there that actually shows the last 48 years of Bay Area real estate growth. And even though you've got some peaks and valleys, it just continues to
1989 to 91 was pretty bad.
Yeah.
Give out that we forgot to ask. Give out your website so people can check that out, and also how they get a hold of you.
Well, you can. My name is Julie Kennedy, and I'm with Marin Modern Real Estate, and we're located in San Rafael, but we also have San Francisco Modern, East Bay Modern, and White Country Modern.
Right.
So we really cover the entire Bay Area. And you can reach me. My cell phone number is 415-497-8584. Again, 497-8584. And if you want to visit my website, you would go to Team Nest at marinmodern.com, or you can visit me at nestinmarin.com.
That's kind of sweet. I keep thinking of these little robins nesting and stuff.
Yes.
Julie, how long have you been in real estate?
Well, Natalie, my partner, and I were just getting together to rewrite our mutual bios for our website, and I've been in real estate 10 years, but I've been an investor in Marin County real estate since 1976.
Good time
And
to start.
so, so together, Natalie and I have over 25 years of real estate experience, hands-on real estate, full-time
More than that. I
experience.
mean, if you've been doing 1976.
Well, but in terms of how long together we've had our practicing with our licenses, we have 25 years of combined experience.
Okay,
But
so
yes,
kind of
I
seen
had
the whole
rental
gambit.
property and investment property at a pretty young age.
Okay.
Yeah.
So now on the rental property, that's where you want to tell people to continue to rent.
Absolutely.
don't everyone just go out and buy. I mean, you kind of your hand in both pots, right? It's like you want people to buy because you can.
Well, you know, it's interesting because I'll just tell a little anecdote. I have clients that are also very good friends, and they bought a condominium in Pacheco Valley for their daughter a few years back, and they're trying to decide. And little did they know, or they were hoping, they did buy actually at the very bottom of the market.
Wow.
But you don't know it's the bottom, of course, until it starts going up. So this property is appreciated quite nicely. So they asked my advice the other day: should we sell now or rent it? And my advice to them was rent it. Hang on to it, because going back in time, they haven't hit the peak in that particular unit
I see.
that we had back in, let's say, 2006, 2007. So if the market continues to grow, which I believe it will, there's still some room for them to build equity before they trade it up or cash in.
See, I appreciate that. You know,
Yeah.
here's somebody who is being honest, giving her best advice, what's in what you believe is really in the best interest of the client.
What you would do if it were your own situation.
Exactly. That's the way to handle it.
Well, that's the best advice.
Okay, we are going to cut to our third commercial break trivia question. Again, the theme is Gilligan's Island. Do you think you know Gilligan's Island? When we come back, I've got an interesting article here about the Postal Service and union battles and staples. Kind of interesting there. Okay, here's the third trivia question. What was the skipper's first name? This is a tough one. The first three, I think, if I remember correctly, it was only one time in the whole series that they ever stated it, and it was in the first show, I think. The first three callers with the correct answer won a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. What was the skipper's first name on Gilligan's Island? And it wasn't Mr. Skipper or Little Buddy. No, that was the... okay. Make sure to include your name and your email address. Speak slowly. Spell out your email one letter at a time. Don't touch that dial because the best of investing will be right back.
See, I could tell you the captain, not the captain, the millionaire, excuse me.
What was his name?
Wasn't it Thurston?
Thurston Howell.
The third?
And his wife? Lovey.
Lovey? Oh.
I think that's actually what her name was, Lovey. Do you know, Engel? I mean, you know the story?
You know, I knew it was him when they were doing the,
You know the story, right?
No.
It was in the front page of the paper. Blessed Marvelous Herb from the Congo scammed them out of 1.6 million. You just kind of go, what is wrong with this picture?
well, and, you know, he, of all people, should know better. I mean, he was one of the founders of,
First Red Realty.
First Moran. And
Yeah, it was amazing.
I actually went to high school with his ex-wife, with Marcine.
Oh, Marcine Engel, that's right.
But
And she's happy she's.
that's
really.
American history. Look at,
Well,
Madoff took a lot of smart people down.
Yeah, but this
Yeah, but this one, though,
I gotta
This
say.
was so out there.
I
I just need 30,000. Well, my dad needs a bulletproof limousine. And it's like, well, then pay for yourself.
Yeah.
I mean, if it's really that real.
What happened is they kept chasing their own money because
Yeah.
he kept saying, "Well, I can't pay you back unless we do this."
Right.
So it's like being at a bad craps table.
Send
Yeah.
the money.
Yeah.
Send the money to Senegal so we can get the king to send you the $1 million.
It was almost that bad.
Yeah, it was very sad. So now he's selling used cars in Florida, and they're living with his second wife's sister in her condo.
And humiliation.
And they've spent all of their, all their retirement funds. Hey, do you have a loan where you can pledge your?
Pledged assets.
Yeah.
Yes.
That's a really interesting topic.
Yeah. Yes.
Right?
There's some of them they'll
What kind
give
of
you
flex office?
hypothetical income for your assets. People are older and retired and don't have an income, but they have a lot of money.
That's a good
Certain
topic to
banks,
talk about.
Certain banks
I'm
will give you
fascinated by
hypothetical,
that,
but there are other banks that will actually pledge the assets and hold them.
Right. And I know that I think like Merrill Lynch has a program now, where even the parents have pledged their assets for their kids.
Yeah.
Okay. I'll go into this little thing here and
Yeah.
you'll get into that because we have a decent amount of time. We have 13 minutes.
Okay.
Got a long one. Okay. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Julie Kennedy and Robert Shep. When we cut to the third commercial break, we asked this trivia question. On Gilligan's Island, what was the skipper's first name? It's a tough one.
What was his last name?
I didn't get that. I just know his first name, Jonas.
Oh.
Jonas Skipper. Okay. Now, I said I've got this interesting article here. This is actually about a couple of weeks ago, but I thought it was kind of interesting about the Postal Service. So we all know about the Postal Service here. It says the opening.
It's called Going Postal.
Yeah, exactly. Yeah, there's a reason for that. The opening of Postal Service retail centers in dozens of Staples stores around the country is being met with threats of protests and boycotts by the agency's unions. And, basically what they're doing is they're hiring cheap labor to go ahead and hand people stamps and weigh the envelopes. And, I'm sure it's not too complicated, I'm guessing, right? So it says here, and so what's the big deal? Well, the big brouhaha is if Staples insists on continuing to refuse to staff those stores with postal workers, we're going to urge people to take their business elsewhere. Other than
Canada.
Well, I think it's like boycott Staples, go to somewhere else. And it's like, but the union says it's not asking to shut down the program. It just wants the counters to be run by postal employees, not workers hired by Staples, because the average postal worker earns $25 an hour, according to the union, plus a generous package of health and retirement benefits.
I'm sure Staples is absolutely willing to do that when they can get people to do the same job for the minimum wage or a little bit more.
Exactly. It gets people into Staples. And, I love the
But
idea.
you can buy stamps at a supermarket
Yeah,
or
same
I was just going to say, it's very convenient.
Yeah.
Well, you know what I find really interesting is that some of the post offices are like, I used to be in retail, and you go like lunch and have their A stores, B stores, C stores. I think the Postal Service has the same deal. You have these really nice post offices where you can weigh your own, get your own stamps, and basically self-serve.
Okay.
Then you have the one like where I live, where it looks like like it's been wiped out by every possible, mailing label or package.
And there's a pony out there for the Pony Express.
Yeah, and there's just it's so not in any way self-serve, and the technology is certainly there for us to be able to go in and pretty much hand our package already addressed and labeled and stapled and ready.
Stamps are getting so expensive.
Stamps are getting expensive.
It's 49 cents now. And
you know why they went up? Because everybody's using the internet.
The email, And I'll tell you, I personally like FedEx. I've never had a problem.
It's true.
And I'm sure, like it's funny, the movie Castaway with Tom Hanks.
Yes.
You go, oh gosh, I guess one day my packages might end up on a faraway island. But so far, in 20-something years of using FedEx, I've never had an issue with them.
The post office has a problem because they have to deliver everywhere in the country, and a lot of the rural places don't make economic sense to deliver. That they have to every day drive by, Star Route, whatever.
But aren't there some places where they say they make you go to the post office?
Certainly there are in Marin County.
Yeah, like in San Geronimo Valley, they don't deliver
you don't.
your door.
Exactly.
Right.
So at some point, even though it's rural, it's maybe not that rural.
Yeah, they won't deliver. And it used to be that everywhere in the country you would get 2 deliveries a day, and then it was 1 delivery a day if they deliver, and don't you go to the post office. And now they're talking about cutting Saturday and Sundays out.
Well, Sundays are already out, but Saturdays, Wow.
Look at Carmel; they don't even have street addresses. You have to go to the post office, right?
They don't have street
the whole
addresses.
city.
They don't. No, if you live on Main Street, second house from the northeast corner.
Really?
Mm-hmm.
How do you send something? Wait a minute, I've sent stuff to Carmel with a real address.
Well, it could be maybe like the downtown, but I know I had a friend that lived not far from the downtown. They do not have street addresses there. It's the oddest thing.
How do you go to a party, Well, the one with the balloons. I mean, in China, they used to do that.
With the blue door.
They say, the third castle from the left or something, kind of crazy. Before we actually, at break, Julie brought up an interesting thing about loans with regards to pledged assets. Why don't you get into that more and then ask Robert the question?
Yeah, I was talking to somebody about this the other day, and what seems so appealing to me with this particular program is that, for example, if parents have a retirement account they're not retired yet. Let's say they have $1 million and their son wants to purchase a home and needs a down payment. You can pledge the 20%. It's held separately, and until 20% of the loan is paid down. Once that happens, then Billy, the son, can go out and get his own loan. But up until that time, if I'm correct, these assets are pledged.
That's a good idea.
And there's no penalty.
No, there are programs that give hypothetical income to people for their assets if you're older or you're retired or you don't have a income that would qualify under the new regulations, but you have sizable assets. There are several different banks that will give you hypothetical income off of the assets so that you can qualify.
So if you have a
also
Picasso
that
painting,
I
mean,
no,
what are hypothetical?
Well, stocks or bonds. Or
Yeah, but then you can go to the
liquefiable.
Well, okay, because I have a question about that. If you own, 100 shares of IBM,
yes,
you can margin that with the stock brokerage firm at a very reasonable rate.
Yes,
and get the cash.
Mm-hmm.
If it's a penny stock, you can't. So, I'm assuming the mortgage companies would be the same way.
The mortgage companies will just look at the assets, and if they see that there's something that you had that you didn't just acquire,
that produces income, or
no, not necessarily. No, could be stocks that don't give out a dividend. Just they're holding on to, or they're looking at a certain amount of assets, and certainly the larger brokerage firms do that themselves. Merrill Lynch or Schwab, or they'll let you
How about
borrow off of it, but this is not borrowing off of it. This is
pledging it? How about submerged land in Barstow?
Oh, absolutely. All the banks will go for
There
that. Well,
you
wait
go.
a minute. No, actually,
But,
they won't.
but what I liked about this particular program where say the parents can pledge is that the loan and the title is in the child's name.
Okay.
It's just the down payment is pledged. So the parent doesn't have the liability long term.
So you mean
That's good.
an example where the kids would qualify, but they just don't have the money?
Exactly.
Yeah, because it used to be that you weren't allowed to borrow your down payment. Where did you get it from? My
Right.
parents, and they didn't like that.
Right.
Same thing with gifts.
This
No.
eliminates that.
Yeah. So I'm not familiar with programs where you can pledge the assets but not put them in if you're not on the title or on the loan itself.
So if you
That
pledge
would
it,
be
do you sign it over? Do you?
Well, it's a little. That's
So
why
kind of-
I'm not
I'm not
understanding
sure.
the program. If the parents are to whom are they pledging the
Yeah.
assets? If the bank is the kids are buying the house and they're not on title.
Maybe
The
there's-
parents
maybe-
aren't on title and they're not on the loan.
Maybe they're signing it over to the bank to be held.
They are.
Oh,
It,
okay.
essentially
way they
almost
can't
like an
sell it.
escrow,
Okay.
Yeah.
a long-term escrow where the funds are
That,
held.
that could certainly be done if they're going to, well, in certain instances, certain banks and programs would allow that, but they'd have to pledge it to the bank, and then the bank would have a hold on it.
Yeah, and I haven't read obviously the fine print
But they-
on how it works, but I sat down with someone from an institution that has this program. She says it's really quite a good deal for a family that they don't want to fork it over to their kid, or they don't want to co-sign.
Well, I was thinking about the mortgage insurance that you were mentioning, because that can get kind of expensive.
The FHA fees have gone up astronomically.
Okay.
But there are private mortgage insurance, PMI, that if you need to use it, it's great, but there are, as I said, certain avenues where if you have 10%, you can get into a property, even if it's a $1 million property or more, with just 10% down. And there's certain programs where people can come in and give you the other 10% on a loan that there's
Or
no
pledged
payments
assets.
on. Yes, so there are many avenues. I wouldn't refrain from looking at property because you're trying to save up the other 10%. By the time you do,
It'll be up
property-
20%
yes,
more.
So,
Yeah, but if you can do something like pledged assets,
Pledged
or
assets
something,
or-
to
yes.
because how much are the
And-
fees on the PMI?
they could be as much as probably. It depends if you're borrowing 95% of the value or 90% of the value or 85. There's a sliding scale, but as a rule of thumb, I'd say about 0.5%. So
That's
if you have
great.
a
That's a
four-
lot.
If you have a $400,000 loan, you're going to be paying
$2,000.
$250
A month. Yeah, that's actually
So-
pretty, that's pretty
So
sizable.
it's the equivalent of adding about 0.5%
Yeah.
to the
That's
to
my
the
cable bill.
mortgage rate.
Yeah. It's, I was going to say that it would be worth it to get someone to pledge assets. It doesn't have to be parents; it could be any assets, right? From anybody. Or does
That
it have to
I
be-
don't know.
The program that I was
Might have to
looking
be a
at, I
relation.
believe
I think it has to be
a
family.
yeah.
Family.
They don't want Vito to have pledged.
Yeah.
that.
Yes.
But if you get the family though, then you can say, "Hey, mom, dad, I'm saving $200 a month because
Right.
I'm not even pay PMI. Here's $1."
Yeah, so there are several different avenues available without having the 20% down, certainly.
Well, we have just about a minute left. Any last-minute comments?
Let's see, the 49ers aren't playing tomorrow, so maybe they'll be looking at open houses.
I hope so.
Well, you were saying, Robert, that it's like people after the Super Bowl suddenly go, "Hey, we're in
Oh
the new
yeah,
year."
I've always see it. I mean, when I was a realtor and even as a mortgage broker, the Super Bowl was over. Certainly when the 49ers were active, but they were active pretty much until this final game.
Yeah.
Well, I have to
That-
tell
and
you
then-
though, the secret about having an open house during football season is you have to check the schedule and see when they're playing. So when one of the playoff games, the game didn't start till 3:30 or 3:45, so we just started our open house earlier, served the chicken wings. We were good.
Do you think people check that ahead? I mean, do they say, "Okay, hey, we want to do but football, so we're not even going to think about
Well,
it"?
the open house that I had during the playoff game was extremely busy. So I suppose
Okay.
if they
People
say,
had to get out and get air.
And a lot of times, don't you have the why? Let's say, the typical situation, guys are interested in football. Don't you have the wives like check things out first, and they can kind of lay the groundwork?
we had a lot of couples and actually a lot of men show up for our open house. So
Unpatriotic. No,
I
no,
know.
seriously.
no, but they were all rushing out the door. They were all
They
leaving.
had-
But see, I
Very
don't,
quiet.
and it's funny because I don't really honestly get into football that much. I used to when I was a kid, but I don't really get into it until it gets in the playoffs.
Mhm.
And then I'm like really focused. I want to see every single play and everything. Okay, great show, guys. Thoughts for the day. An old friend will help you move. A good friend will help you move a dead body. And I knew Robert would like that. And a friend is someone who will bail you out of jail. A best friend is the one sitting next to you saying, boy, that was fun. Tune in next week to the Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.
All right. It was the program.